Hello there, this video was brought to you by Money Sellers for University. In today's class, we'll be looking at one important candlestick pattern called dark cloud cover. But before we continue, if you have not yet subscribed to this channel, then please encourage me at least for the time I spend in making this video by clicking the subscribe button below this video so that whenever I release any new video, you will be the first to see. Also follow me on Facebook for more content. Without waiting much longer, let's proceed. Today, we'll be learning dark cloud cover as a reliable trading strategy, but not just as a candlestick pattern. Dark cloud cover is a bearish reversal candlestick pattern that is formed after an uptrend, signaling a potential bearish reversal. Traders often view dark cloud cover that the bullish momentum is running out of steam and sellers are gradually gaining strength, also signaling end of an uptrend. For a strategy to be valid, there are some rules we need to follow. So for that reason, there are some rules we must maintain for this strategy that we want to learn today, dark cloud cover, to be valid. The number one rule is that the dark cloud cover pattern must not be spotted in a ranging market. It shall be spotted at a resistance after a long bullish move. And the pattern consists of two different candles of opposite color, the bullish candle and the bearish candle. The bullish candle opened at the low and closes at the top. Now, the next day, a sell candle gap far above the close of the bullish candle and it closes at the body. The close of the sell candle must not engulf the bullish candle. If it should engulf the bullish candle, it is not a dark cloud cover any longer. It is an engulfing candle. So this bearish candle should close at the body, at least 50% at the body of the bullish candle, or 75%. When we spot something like this, as far as it's happening at a resistance, then this is a perfect dark cloud cover pattern. The higher the time frame that you spot this dark cloud cover, the better the signal. After spotting the dark cloud cover, the next thing we are supposed to do is to pick a tool like a trend line. That is another rule, a tool like a trend line or horizontal line, so that we can use it as entry filter. So let's go to the chart for examples. Let's look at Euro USD weekly time frame. In Euro USD, there is a dark cloud cover spotted at this zone. This is a bullish candle followed by a sell candle that gap far above the close of this bullish candle and close at the body. This is a dark cloud cover. The open of this candle is higher than the close of this candle. This is what we mean by dark cloud cover. Another thing we need to check, this thing is happening at a resistance and it coincides at area of overbought. So this is a perfect dark cloud cover. So we should look for entry. How? We are going to pick a line, and the line we are going to use is horizontal line, because I'm not going to use a trend line. If I use a trend line, it will give me late entry. So I will pick horizontal line and I will drop the horizontal line on the low of this sell candle. As soon as I do that, I will go to a smaller time frame. A smaller time frame for my entry can be daily time frame, hourly time frame, and then when I go to any of the time frame for my entry, I will wait for a candle to break and close below the line. So we are learning all this is in case when we see another thing again that is like this is how we trade it, because dark cloud cover is a pattern that we'll always see. There is no week you will not see dark cloud cover. So this is the one that happened in the past, and when it happened, this is how we trade it. When we put the line and drop on the low of the sell candle, we narrow down to the smaller time frame, like daily time frame, any time frame of your choice. It can be hourly time frame. So when we go there, we wait for the price to break and close below this line. And when the price breaks and closes below this line, we are going to take a sell. And if you're a trader who is already buying this market, after spotting dark cloud cover, you can take your profit. You can close your trade because of this dark cloud cover. Because this dark cloud cover is telling us that the buyers are losing momentum, the buyers are losing strength, signaling bearish reversal. So this is the point where sellers can join the market to sell, because the market, we're expecting a bearish reversal. If you are taking this trade, let's check how many pips the market move. Let me assume that we took the entry at this level. Then we measure to here. This market move about 502 pips in our favor. Another example we need to look at it again is Euro NZD daily time frame. This is Euro NZD daily time frame. If you look at this market, the market has been maintaining bullish move. Up to this end, the market printed the bullish candle. The next day, the sellers came in and they opened far above the close of this candle, and then they closed at the middle of the bullish candle. This is a sign that this bullish move is losing momentum. So we as traders who want to sell the market, what do? We take advantage of this, and the market is coinciding in an area of value. The RSI is giving us extremely overbought at this zone. So So what we do, we go and pick a line, we drop the line at the low of this price, at the low, the tip of the wick. When we drop the line at the tip of the wick, we go to a smaller time frame. When we go to a smaller time frame, we wait for a candle to break below this line and close below it. Once that happens, we take a sell. Remember, we have two types of entries. We have the aggressive entries and the conservative entries. Now, as an aggressive trader or a trader who always takes trade aggressively, you can take a trade as soon as the candle open and close below like this. You can take a trade. But anybody who wants to trade conservatively, you want to have to be more sure before you take a trade. Then you will wait for a break and retest before you take a trade. And what happened after that? Let's measure how many pips that the market went. The market moved from here and then down here, and it gave us 1,256 pips. Now, how do we take profit trading dark cloud cover? You take profit by trailing your trade. You need to trail your trade. As the more the market is going in your favor, the more you secure your profit by using modification or trailing stop. Then we put your stop loss above this level. Another time frame we need to look at it again is the weekly time frame. In the Euro NZD weekly time frame, this is what we spotted. This is another dark cloud cover. Sellers came in and then they opened far above the close of this candle and the close at the body of this candle, at least more than 70%, but it did not engulf this candle. So this is a perfect dark cloud cover. So when we spot this, what do? We pick a line, horizontal line preferably, because this market did not give us features of a trend line. And then we put the line at the low of this bearish candle. After dropping at the low of this bearish candle, we narrow it down. We go to a smaller time frame, smaller than this. It can be daily, it can be H4, it can be H1, it can be even any time frame that you like, depending on what you want. For faster entries, that's why we are going to a smaller time frame. We go there and we wait for the price to close below this line. If that happens, we take a trade. And that is it. I want us to look at many examples that we can, but I'm running a race against time. I don't want this video to be too long. That is why I am compressing everything. Now, let's go to GBP AUD. The GBP AUD daily time frame printed a dark cloud cover. This is a dark cloud cover. These two candles make up the dark cloud cover. So what do? We pick horizontal line and drop on the low of the bearish candle that formed the dark cloud cover. And when we do that, we go to the smaller time frame and we wait for a break of the line. We wait for a candle that will open and close below the line. Then we take entry. One more thing that I need to let us know. If you go to the entry time frame, just look at the entry very well. Don't just take entry carelessly. Before you take entry, ensure that the candle does not break with a pin. Let me show us what I mean. If this is the level we are looking at, if the candle breaks like this in the smaller time frame where my cursor is, this break is invalid. We don't need the candle to break with a pin. We don't need the candle to break with a rejection. We need a candle that will break with a body. The break should be like this, should be full, should be like this. There should be no lower rejection. When we see something like this, why not go for a sell? And that is it. Another example we need to look at it again is AUD USD. Now, the weekly time frame, AUD USD, the market printed a dark cloud cover here. These two candles make the dark cloud cover. Now, when we spot the dark cloud cover, the next thing we need to do, we need to pick a horizontal line and drop it on the low of the sell candle. After dropping the line on the low of the sell candle, we narrow down, we leave this time frame and go to the smaller time frame of our choice and wait for a candle to break and close below this line. When a candle breaks and closes below this line, what we do, we are going to take a sell. And that is it. If you follow these rules, you will enjoy trading Forex. This is a highly reliable trading strategy, and this is one of my best trading strategy. Thank you for being with us. This is where we are going to call it a day. Don't forget to subscribe. Follow me on Facebook for more content. Also comment below the description of this video. Share and like for others to see. If you are interested in crypto farming, then join our Telegram group where we share links of potential airdrops that can fetch you hundreds and thousands of dollars. All the links are below the description of this video. Thank you and bye for now.